Hello. Today's video, we're going to talk about the recent price action with what's been happening with the dollar, um, and kind of how that's potentially going to relate to gold and everything. Obviously, the dollar, if you guys have been following the DXY chart, which is highly important, or I highly suggest you to start following the DXY chart if you're trading gold, trading any dollar pairs for that matter, but especially gold. Um, oops. You can see that we've actually finally broken through that key resistance level that we were talking about before, kind of that range between, okay, it's a bit higher than actually zero point 0.5, but 92.6, 92.7, a range that if you look at the chart here, I'm on the 4-hour right now. If you look here, 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 we retested multiple times, and it kind of looked like we were just going to have that sideways price action that was very choppy, but we finally broke through it. And now we did that classic price action as well, where we broke through it and we made it new support. And now we're continuing higher here, as you can see on the dollar chart. So actually this support range should probably be now turned green. But so let's discuss quickly what is going on and why is this going to be important for gold? Okay. What is causing the dollar to shoot up like this? Okay. And in my opinion, um, this is all still after effects of the crazy CPI report that came out last Tuesday on July 13th, if I'm not mistaken. Let me just check. It was July 3rd. Yeah, July 13th, Tuesday, July 13th. If we look at the day chart in terms of price action, just to show you, this is the day that we actually had so this candle here, this big up candle is the day we actually had that push up. The CPI data came out, completely showed ridiculous inflation happening right now. And we had this pretty bullish candle. Now, this is what I was talking about before in the video that I did the day after the CPI report came out. You really need to give the market a few days as well sometimes to digest the news to see what's really happening in terms of where price is going to go. So now that we've had basically almost a week, since that news came out, we have now seen the dollar react super strongly, pushing higher than it has in quite some time. And now we're actually retesting um, relative highs that we had set previously back in March, which is around the 93.4, 93.5 price range. Um, Now, you guys may be asking, like, why on earth is dollar going up when the inflation rate data for the dollar is just so ridiculously high? And the reason, honestly, is because investors are basically betting on the fact that, well, it's really two things. One, investors are really betting on the fact that the Fed is going to actually increase interest rates, and is continually getting pressured to increase interest rates. Okay, so there's almost a bit of buying the hype, selling the news happening here at the moment. I do think that we're not going to continue this run up necessarily forever. We haven't been this high in quite some time, you see, and we're getting very close to, I mean, when we're looking at the whole last year period of price action, it's been a while since we've been this high up on the DXY. So I do think that we're going to get profit taking again happen here and then maybe go back down, test these lower levels again. I'm not just saying we're going to continuously shoot up straight like an arrow. I don't think we're just going to go straight up like that forever, right? But I do think that right now there's a lot of buying the hype, selling the news happening because investors are kind of betting on the fact that the dollar is going to go up because the Fed is going to be pushed or pressured to start talking more about increasing interest rates. Okay. At the same time as well, just given what everything that's been happening, right, with the economy, how the economy is kind of recovering, um, and at the same time, a lot of other currencies, right? Like there's a lot of COVID there is a COVID situation happening, which is affecting a lot of other markets, not necessarily the US right now at all, but other markets like whatever, Europe or whatever it may be. So investors may start moving a lot of their currency in those types of markets into the dollar, which is kind of a safe haven currency. So I think there's probably a combination of those two things happening more than anything. But out of those two narratives, I do think that heavily that the inflation narrative is the real key driver that's pushing it up, pushing the price of the dollar up to these levels that we haven't seen in quite some time, right? We've had now basically 5 straight days of positive price action. To further cement the fact or cement the idea that, this is really being caused by that crazy CPI data report, we only need to look at also the 10-year yields, right? Yields, we haven't seen yield levels this low in quite some time, right? I mean, not since October of last year. And as we can see, this was the day, we're on the day chart, right? This was the day that the CPI data came out. We were already kind of trending on a downwards way, but we had that initial bounce off prior on the 200-day for the for the 10-year yield chart. But clearly now we can see that the yields have dropped so much over the last week, right? And this again is a result of the inflation data. Why is that? Because people are basically, or investors are basically betting on the fact, right, that the government will be forced to talk about raising interest rates. Raising interest rates is also bad for bond yields. Okay, it's bad for bonds. Why? Because it gives investors less incentive to buy bonds when you can just get better rates right now, putting your money, for example, in a savings account. There's no reason to start buying government bonds because the interest rate is not necessarily as attractive as it previously was if if the government or the Fed chooses to raise interest rates. So I think this is kind of a real confirmation to see that now the market has really kind of chosen a general trend or direction in terms of how they are currently reacting to the CPI news. And last but not least, we want to take then a look at gold. So gold actually has shown, after the CPI data came out, gold actually surprisingly went the opposite direction. I think there was, again, a bit of profit taking happening when the CPI data came out, especially with the dollar, right? When we got that bounce up, hit that key level, and then people started taking profits on their dollar long positions. But now, ever since we had that initial 3 days of kind of positive price action in gold, now we're really starting to see gold start to sell off, right? And it's hard for me to just say that, oh, like I'm still pretty bearish on gold price now that I've seen these last week of price action. Obviously, right now it's also like it sounds kind of stupid or obvious, but what I want to say more is just that um, if you're bullish on gold right now, I would just be very, very hesitant, okay? Because there is a lot of pressure right now in all the media. People are really pushing a narrative right now that inflation is too high, and people are kind of expecting the Fed to do something about it. If the Fed, and what I mean by doing about it is not even just like actually raising interest rates. Of course, that's not going to happen. But what I mean more is just even address it, whether it's a speech by Powell, whether it's some sort of statement by some other Fed member, whatever it may be. It's very, very clear that the market is very tentative around this fact. And I think we need to, especially if you're a gold bull at the moment, I just think you need to be very, very wary that right now, even if price were to reverse at these levels, or we go and test like kind of like 1780 and then we get that kind of bullish direction back upwards, or we actually manage to hold above 1800 after today's close, or whatever it may be, and we start seeing a push back towards 1820, I would just urge you, if you're a gold bull at the moment, to be very, very wary that any slight statement from Powell, for example, at the moment, just given what the CPI data was, could seriously cause a really, really drastic sell-off in the price of gold. So you just need to be aware. There's no other big kind of speeches or announcements happening this week. And I believe next week there isn't either, but let me just quickly check now. Let's see what the news is happening, what kind of news or data is supposed to be coming out next week. Uh, let's see what's coming out. Yeah, nothing that I can see that's going to move the market as much as that. There shouldn't Oh, another Fed interest. Oh, there is another FOMC press conference, actually. That could be very interesting, right, on the 29th of July. But anyways, my point being just is that you need to be aware that the market is kind of very, very wary, can be very, very volatile right now due to the crazy CPI number. And therefore, you need to be prepared for the fact that the market right now can turn on a dime, okay, especially towards the downside, just given where we are at the moment, just given how the dollar has been moving, and just given how bond yields are decreasing, okay? It's all based around inflation at the moment. So now we're really seeing this trend potentially build out. Um, so last thing, how would I, if I want to trade the market at the moment, trade it? Um, honestly, I think I think there's still potential if there's no announcement from Powell or from any other FOMC member or whatever, if there's no real talk about interest rates and stuff, I think we can still see a lot of sideways, or not even sideways, but just a lot of very volatile price action, which depending on how you like to trade could be good or bad. But overall, I just feel like um, being a little more bearish on gold just makes more sense at the moment, just given where we are. Um, we still have a bit of room to go before we start hitting this next key range in the dollar. So it wouldn't surprise me that if we got to lower levels on gold, whether that be at 1780, 1770, and those types of levels, again, if we start to see a retest. Also, from a technical standpoint, we're also at a pretty key level in the fib, where we clearly got a pretty strong bounce at the 0.5 level now from this big drop that we had basically at this relative top here. Um, so we could easily see, I think, potentially reaching back down towards 1789 before getting a bit of a bounce, but then even going a little bit further down. I think that's definitely likely, just given where we got this really strong bounce on the fib. So right now, I would still lean pretty bearish, but again, it's going to be volatile right now, and price could easily swing one way or another. The Fed could also easily come out and just say, yo, you know what? We still don't care about the inflation, and actually it's going to go away in a matter of months. No problem. This is more than expected. And this could then just cause actually gold to go the other way around, right? Where the government doesn't care about it. Inflation's still going to be high. So then at that point, the dollar is definitely going to switch to become more bearish, and consequently, gold is probably going to be more bullish. Okay, but I would just be hesitant. So just be wary and trade smart. Use stop losses at the moment. I would highly suggest that. All right, if you have any questions, definitely leave a comment. Give my video a like. Hope you like this stupid analysis I do sometimes. Anyways, take care, guys.